Wow, what a jobs report we just came off of. And next week, we're going to have inflation data. Does it matter? Yeah, it matters. Especially after this week's jobs data, it matters a lot. My name is Blake Morrow. You're listening to the Week Ahead video, and this is the Week Ahead video for October 6th, 2024. We've got a lot to talk about this week, just coming off a massive jobs report. Take a look at the dollar index. What an explosive move that we got following the jobs report. This is, it was just it was a blowout number. What else can you say? Big, strong number. Question is, what's going to be happening as we go into next week? Like I said, we're going to talk about all of that and more. And matter of fact, I got a lot of things I want to just have a discussion with you about. And we'll start off with, just what's happening this next week. So this next week, we do have inflation. And because of the big jobs report and the big beat, the focus, I don't want to say is just shifted to inflation, but with all the economic data that we've had, with the strong jobs report, you start to think, okay, inflation might actually matter, because if inflation starts to reemerge, reemerge its ugly head, will the Fed be able to actually continue on this aggressive rate cut campaign that they kicked off this last month? And a lot of people and a lot of economists are actually wondering, was the 50 basis point cut a mistake? And I know you guys and gals at home probably have an opinion about that. So make sure you jump down in the comments below and let me know what you feel or how you feel about where the Fed's at and what they've done. And looking at the economic data that we have, are they going to be able to continue down this path? Now, like I said, I've got a lot to cover this week, and I'm actually filming on a Friday. I usually don't film on Fridays, but I'm doing it today. So the data in our charts will be moving. But let's talk about this next week. This next week, we have a ton of Fed speakers. So you might be saying, well, okay, we got CPI, but what else is happening? CPI and PPI. We have 19 speeches. I had to go back and count them, and I might have missed one or two, or maybe miscounted, but it's about 19, if not 19 on the number. So Fed, all the Fed governors, they've definitely got something to say. So volatility is going to be abound this next week. Speaking of volatility, we should talk about the jobs report and what happened, more importantly, with yields following the jobs report. Take a look at the 10-year yield. It just is screaming. Here's the yields. So up 3%, and I guess the question is, where are yields going to go from here? We just broke the 50 DMA. Could we possibly make it up to the 200 DMA? Well, again, with all these Fed speakers next week and with inflation next week, it's entirely possible that we trade that high. And you have to think about what the response of the dollar is going to be in a situation like that as well. All right. A couple other things I wanted to mention really quick before we actually get started. We are in it's Friday, and I think through the weekend we're going to keep this up. The 8-year anniversary sale. These are prices that traders wait all year long to get these prices. And if you want to be in the Forex analytics community, have conversations with me. Like for example, when some of the traders were talking about thoughts on the euro sterling, and everybody jumped in over the course of the last hour talking about what their views, my views of the euro sterling, why we're here, what longer term views are, and where different people see pivots. If you want to have conversations like these, jump in the Forex analytics community, but take advantage of this pricing, because this is the best pricing you're going to get all year long. We have lots of tools.
Webinar
you have
online.
Analysis on 30 different instruments, not just currencies. Obviously, we talk about boons, we talk about gold, DAX, 10-year, Ethereum, Bitcoin. So, and the S&P, there's a lot of different markets that we cover, and you have a lot of great tools and different types of analysis located in the Forex Analytics program. So make sure that you take advantage of these prices. And I did want to mention that before we move along. All right, so one of the big things that we have to talk about this week, and I have to go back to our conversation from last week. Last week we talked about the yen, and if you recall, when we were trading down here at the end of the week, we were trading after the new prime minister was elected. we saw the dollar yen actually slip down towards 142. And at last week's week ahead video, I said, look, we're definitely going to recover. That was a lot of end of month flows. You had the dollar, you had yen buying. You're going to see it moderate. I did not expect us to be trading up here at 149 today, 148.96, as you can see at the time of recording. That's been a big hell of a move. But the thing about, the yen is it's been really wild, but we're starting to get to levels that I'm finding very attractive to be on the short side, meaning starting to buy yen. But you got to let the move in yields kind of play out. And right now it's a Friday. It's at the end of the week, and we're just seeing the yen continue higher and yields continue higher as well. So lots of reaction from the jobs report, lots of reaction from Japan as the new prime minister, basically said, hey, look, I don't think Japan's ready for more rate hikes. And so people think that the BOJ, listening to the prime minister, Ishiba, is going to have to back off their hawkish rhetoric and raising rates. But we'll see, as the Bank of Japan is monetary policy decision will be coming up soon. All right. Also, I should mention this really quick before we get into all the events that are happening this next week. If you take a trader funding program assessment, okay, we are offering a 20% discount. We did it in the month of September. You'll get it in the month of October. So we're offering a 20% discount. Figure out what account size you want to access, and you take an assessment. And if you take an assessment and you're new to the trader funding program, you'll get a one-on-one session with me. So I'll basically tell you, how I prepared to pass an assessment, how I passed an assessment, and maybe it might give you some ideas on how you could pass an assessment so you can unlock large amounts of capital, especially if you don't have this available to you. Plus, you don't have to put your own money at risk. If instead of trading somebody else's $250,000 or $1 million account. So check out the trader funding program. We have a 20% off the month of October discount for new traders into the trader funding program. We did it in the month of September. We're doing it again in the month of October because of its success. All right, going back into next week. Next week, let me grab the dashboard really fast. Let me pull myself off of the videos here. In the next week, one of the things that I want you guys to keep in mind. Oh, we should talk about this. China, and let's look at the China 50. And I want you guys to see this massive move that we've seen in the Chinese markets over the course of the last week and a half. China's been closed. Now, as far as they're on Golden Week, but look at how the market response with the Chinese stimulus over the course of the last week and a half. I mean, we've literally rallied over 30%, over 35%, really. And so how China responds to this at the beginning of the week, they'll be off on Monday, they'll be back on Tuesday. So be watching the Chinese markets as we kick off next week. But again, Sunday, they're still on holiday, or Monday, rather, still on Golden Week. On Monday, there are a lot of Fed speakers. So actually, let me just take a real quick look as far as Monday goes. Who's on the docket? Right off the top of my head, we have Kashikari is speaking, Musalam is speaking. And but there is more than that, I believe, on Monday. I have to go backwards onto my calendars here. And remember, you can follow along on Forex Analytics if you'd like, over on calendars. You can, just select which week you want to, or what days you want to cover as well. But on Monday, yeah, we have Kashikari, Bostic, Musalam, and Bowman. So a lot of Fed speakers on Monday. Monday night, which will be Tuesday morning. Oh, I need to mention this really fast before I continue on. You guys might remember from last week's week ahead video, I did not use these charts. I did not use the week ahead subset of charts. I had to use my morning edge charts, right? The reason why I say that is because you're not going to see updated drawings for the last 2 weeks. So just FYI. We're going to be doing a lot of adjusting as we go along here. All right, so on Monday night, we're going to have the RBA meeting minutes. So just keep that in mind. Now you can see the Aussie, I think, is at really, really key support, and we're probably going to close at really key support this week. Why is it key? Well, it's the previous triangle breakout point. You can see it right here in blue, and actually, if you just pull that down just a wee bit, okay, we're basically on that breakout point. So if you notice, we stopped at the 127% extension of this last move. Here, let me get rid of this one really fast. And let's delete that. And let's delete the bull flag pattern, because we are at risk now of nullifying this bull flag pattern. We got the false breakdown. We got the breakout. Now the question is, do we have a false breakout that leads to a breakdown? After this jobs report, there's a good chance of that. But you can see right here, we have a little bit of distance to go till we get to the 38% retracement or the 50 DMA. So if you want to ask me where, the Aussie starts to really turn bearish, it would be back below the 50 DMA. Now remember, we do have the Aussie or the RBA meeting minutes on Monday night, which would be Tuesday morning in Australia. So keep that one, front and center. Also, like I said, Tuesday morning in Asia, China will be back online. You're going to see a lot of traders, trying to make sense of everything that's happened over the course of the last several days in China. Tuesday morning, we have Sweden's. We have Sweden's inflation data. Now, the one thing I wanted to talk a little bit about this, because we're seeing a big broad-based move in the dollar, and I don't trade the US dollar Swedish krona that often. I tend to trade the US dollar Norwegian krona more. But the fact of the matter is, if inflation comes in a little weaker than expected, you can see that we are above the 38% retracement. There's a good chance the US dollar Swedish krona could trade to the 200 DMA, or maybe all the way up to 1054. So keep that one in mind as we go into Tuesday. Now, on Tuesday in the US, we have a ton of Fed speak again. Throughout the course of the week, remember, there's 19 different Fed speakers, or 19 different speeches, not different Fed governors, because some Fed governors are speaking actually more than once. Tuesday night, the big non-US event of next week is going to be the RBNZ rate decision. It is Tuesday night or Wednesday morning in New Zealand. Now you'll notice we are testing the 50 DMA. I'm actually going to delete this flag pattern, but I'm going to take you somewhere really fast. I'm going to take you on a little trip, or a magical mystery tour. Just kidding. But you can see we're at the 50 DMA. You can see how important this 50% retracement is going to be on the way back down. Now, the market is trying to price in 50 basis point cut, but I'm going to take you over to Forex Analytics. I'm going to take you over to the blog, and and this is free for you guys to access. So take a look at the latest blog post that was from Ryan Littlestone yesterday on how the Aussie New Zealand will trade, but more importantly, see what Ryan has to say about the potential is a 50 basis point cut. How about if the RBNZ does not deliver? If they do not deliver, we are going to see an aggressive bounce from the Kiwi, which has been really under pressure this week, thinking that the RBNZ is going to deliver a 50 basis point cut. And if they don't, that's what Ryan was talking about as being the risk. But he's referencing more of the Aussie Kiwi, which I think is also an equally great setup. So make sure you're following along on the blog and check it out when you get an opportunity. On Wednesday morning,
webinar
we
online.
have Mexico inflation. Now take a look at the dollar mex. The dollar mex is probing, and I am a little concerned about it right now because I happen to be long some dollar Mexican peso, and I do care while it's above 19. If it gets much below 19, that is where I'm going to get a little bit more. I'm actually just not going to be in the dollar Mexican peso if that happens. But just notice that the 19 level is very, very critical support. we start breaking below 19, this is actually 1905, then you're going to see a much broader and bigger sell-off in the US dollar Mexican peso. And why is that entirely possible? Well, it is entirely possible because you have stocks at all-time highs. And when stocks are at all-time highs, traders want to carry higher interest rate currencies like Mexico. But on Wednesday, we have Mexican month and year-over-year, month-over-month inflation data coming out. So make sure you keep that one in mind as you're trading it. All right, going through Wednesday, there's more Fed speakers, and then we're going to have the FOMC meeting minutes. Now, remember, the meeting minutes are, the accounts of what had happened during the Fed meeting a couple of weeks back. So let's take a look at the US dollar for a lot of reasons. We have all this Fed speak. And let's go to the dollar index. We have all this Fed speak going up into the FOMC meeting minutes. And on Wednesday, we have the FOMC meeting minutes. On Thursday, we have CPI. And then on Friday, we have producer prices. And as you can see, the dollar is actually doing some pretty big damage to anybody who happens to be on the short side of the U.S. dollar this week. You can see the dollar has gone literally from 100.80 to 102.60. That's a big move for currencies. If you think about that, it's probably what, about 1.5%, almost 2% move higher this week. So if you were on the wrong side or the receiving end of that, that one is hurt. Now, the dollar index, as I wanted to point out, is at really key resistance right now. I was just talking with Jim Welsh from Macro Tides. He thinks the dollar turns lower from here. Maybe, perhaps it does. I guess if you take a look at this entire move, when we peaked to the low, we're at the 38% retracement at 102.60. But the fact of the matter is we're challenging the underside of this trend line. And if we actually break higher, that could be quite dangerous for anybody who's on the short side, because the dollar would race up towards the 200 DMA. So what am I telling you right at this moment in time? I would tend to agree, and let's delete some of these lines really quick just to make it a little bit more legible. Okay. One of the things that I would say about where we're currently at on the dollar index is the dollar index is at a very big inflection point. So whether we stop where we're at and we start heading lower from here, like this, that would mean that we're starting to resume that downtrend. Why is that such a big deal? Because if you look at this whole move lower, only making to a 38% retracement gives it a higher potential of a continuation of lower prices in the dollar index. Now, the flip side to that is if you do get much above this 38% retracement, or let's just call it 102.60, you start getting above this, then you're going to get a much bigger and broader retracement, as traders will be looking at the dollar index as more of a big long-term range. And, you have to take into account what's happening in the Middle East. If the situation accelerates in the Middle East, meaning that there's, the tensions between Iran and Israel really start to pick up, the fact of the matter is a lot of traders are going to be running to the dollar as a safe haven. They probably already have enough gold as it is, but going to the dollar seems like a logical response. So if the situation gets any worse than it is right now over the weekend, you might, and going into next week, you might see more dollar buying as we go into next week, regardless of what the data, regardless of what the Fed governors say, and maybe even regardless of what the inflation data gives us next week. All right, so again, we have US CPI, we have on Thursday, we have Mexican CPI, which we talked about, and going into Friday, one of the big events at the very end of the week is going to be the UK GDP, which we should take a really close look at, because if you look at sterling, one of the things that I think is most disappointing with sterling is we have a long-term false breakout. We had this bull flag that was playing out perfectly nicely until this week. And then along came an Andrew Bailey with very dovish comments, and you can see the sterling really sold off. Now here we are back at the 50% retracement, and also facing a big false breakout up here. If we start breaking below this support zone, let's just say if we get much below 129.50, it's really going to start to open up some downside. And you're going to get some bigger, broader downside targets. Now, I know this is UK GDP. I understand it's at the end of the week. And lots can happen between now and then. But there is something happening at the very end of this month, in the month of October, is the UK budget balance. And a lot of people and analysts feel that this is going to be very negative for sterling. So just keep that in mind in the event that sterling starts to really turn south by the end of the week. Think about what's coming up in the weeks ahead. All right, as we continue on, one of the last big non-US events that's happening next week is because we had jobs report here in the US this week. Next week, we'll have the Canadian jobs report. Now, check out the CAD. All right, if you remember from last week and recall, I did not use these charts last week. I actually used my week ahead charts. What I referenced last week is that we had a false breakdown of the support, okay, which argued that we would see higher prices this week. That's what we got. Now, the real question is, can we stage a massive breakout going the other direction with significant dollar strength and significant Canadian weakness? Well, if you look closely at this chart, what you're also going to notice is the 200 DMA and the 50 DMA both connect with each other right around that 136.10 level. Wait a second. Isn't that 136.10 level right there? Isn't that you can see it right over there? Can you see it? Right through here? Yep, right there. Wait, no, right there. Okay, I'm messing with you guys, but you can see it, right? 136, huge pivot. The 50 DMA and the 200 DMA are converging onto that same big pivot level. Why does that matter? Well, shoot, if we get much above that level, you're going to get a massive breakout to the upside. And that is something with a false breakdown that you see a week and a half ago. We talked about this on the week ahead video last week. With that false breakdown, that reversal, we could really get a currency like the dollar CAD going up, especially if we see persistent dollar strength and we have Canadian jobs report come out and it comes out a little weaker than expected. So that is something that could be a mover on Friday. So US CPI, US PPI on Friday, US CPI on Thursday, Canadian jobs report, UK GDP, and we have the University of Michigan consumer sentiment and inflation expectation data out on Friday afternoon, which obviously has to be watched, especially with all the other inflation data that's being released this next week. Okay, so that gets us past the week as far as economic data goes. Now is the time that I want to talk a little bit about other markets. I want to talk a little bit about what's happening in the S&P and copper and crude and what's happening in yields. So make sure you all stick around for all the different markets. And remember, this video, by the time you're watching it, is probably chaptered, so you can kind of scroll through and go to the asset classes that you feel are most important. So let's start off with what's happening in the gold market. Now, gold has been persistently strong and just not backing away. And even the dip today, following the very, very strong jobs report, you can see that gold dipped to support and just bounced right back. Now, I'm going to do a little bit of drawing here on the gold market. Since we are at all-time highs at this point, or really close to, my colleague Steve Valgaris, who does a lot of the analysis on the weekend on Forex Analytics, he had been looking at this previous channel and realized that we are just consolidating on top of that broken trend line. And I think that's a very wise way to view gold, because what we're doing is we're basically just building this triangle formation at all-time highs. So if gold breaks out to the upside, we might continue on towards this 2,700 level and maybe even beyond as we continue to track higher. Until we have a good reason to sell gold, I think you have to continue to look at it on the upside. Now take a look at copper. Copper also stalled this week at a 618 retracement, very critical resistance, but more importantly, instead of seeing just a straight up reversal in copper, what you're seeing is you're seeing just a consolidation below resistance. When you do that, that builds the risk that we could continue higher, especially if risk appetite stays strong. And if there's any disruptions in the Middle East, copper might catch a bid just because scarcity reasons. So just keep your eye on copper. I think copper looks pretty good. Now, let's take a look at crude oil, because crude oil has had a massive reversal. Now, I want to show you a few things with crude, since it's been a while since I've actually talked about this market on here. But since we have this disruption in the Middle East, you can see that crude actually broke a very key resistance when it took out 72.50. But why is that level such a big deal? Well, to me, it was a big deal because it was a 50% retracement of the last move lower. And you can see how it just was capping the market. And now that we've actually, you know what? If I take that back, it was the 38% retracement of this entire move. That was the reason why it was a big deal. Sorry, I'm trying to think about the charts that I've been drawing all week. So previous support acted as current resistance. Once we broke that, we broke the 50 DMA. Now it looks like we're going to take on the 200 DMA, which is near the 618 retracement. That comes in at $77. You know, one of the things that always, whenever I'm looking at the crude oil market, there's several macro analysts that I've actually talked to that say, you know, recessions are usually prompted by, well, can be and have been in the past, prompted by a spike in crude oil prices. In this case, we're looking at crude oil going higher, but what could actually spur some upside movement in crude? Well, if the situation in the Middle East gets any worse than it is right now, you're going to see crude oil prices probably spike back above 80, and heaven forbid we start trading back towards 100. Because if we start trading back towards 100, that could send the global economy, or at least certain economies, into a recession just as crude oil prices start to increase. So that's something for food for thought that I've heard over the years that is worth noting. I did mention yields, but I'll say it again. Yields are spiking higher, and we're seeing a massive recovery. But look at the overall structure in crude, or not crude, excuse me, in 10-year yields. We came out of a massive channel that was it was basically in existence for about 2 years. So any recovery towards a breakdown point, something that looks like right around here, is probably going to find some sellers. So I would be looking at the 10-year. We start getting around the 410 to 415 level, maybe the 200 DMA. You're probably going to see some sellers step in, or some dip buyers in the bond market. So that's something that I would be thinking about near term. Also, I did want to mention the S&P. We are once again at all-time highs following that jobs report, but we have not reached yet for the 127% extension. So you know what I'm going to do with these lines? I'm going to move them over just like that. But I guess the question I would have at this moment, and this is something that I want you guys to be thinking about as we are thinking about what happened in the stock market, and it's Friday, came off a really blowout jobs report. If the stock market can't break to new highs after such a strong jobs report, I then start to question the validity of this rally. Does that mean that you should be rushing out to be shorting the equity markets? Not necessarily, not at this moment. But if we do get a spike higher towards the 127% extension, I think that would be a good level to be starting on shorts. But what's really going to trigger a sell-off for me, and something that's held all week, you can see right here, previous high has acted as support all week long this week. So next week, if we break back below 56.80, that would be very bearish in U.S. equities. Is that a given? No, it's not. Is it a possibility? Yes, it is. And that's why our eyes and ears need to be watching and keeping an eye and listening to what's happening in the S&P, because if that does break down, that's going to bring in a whole swath of different trade ideas, especially when you're talking about the dollar or gold or anything else. So keep your eye on the S&P this next week. Last thing I want to bring up before we move on to the trade review portion of Forex Analytics is what's happening in Bitcoin. Bitcoin has been struggling on its move towards channel resistance. Now, that's not only a channel, but you all know that's actually potentially a big cup and handle pattern. So we're still developing that cup and handle pattern. We're still developing that channel. We're just struggling as we get up towards resistance. So keep your eye on Bitcoin in the days and the weeks ahead. All right, before I get into the trade setups from last week, the review from last week, I do want to mention that if you do enjoy these videos, you think they're very beneficial to you as far as preparation for your next week's trading week, make sure you give us a thumbs up. Jump down in the comments below if there's maybe one of the speeches that you thought one of the Fed governors might have a bigger impact than other ones. Jump down in the comments below. And if you agree with how I'm looking at the markets, let me know about that down in the comments below. I'll look forward to reading those from you. And make sure you give us a thumbs up. Subscribe to the channel. It's free to subscribe. It's free to leave a comment. And it's free to give a thumbs up. So please, we don't ask a lot, but if you could do one of those three things or all three of those things, I'd appreciate it. And so would our team. All right, let's talk about review from last week. So last week, trade number one. I said sell the euro dollar close to 112, stops above 112.50. Well, let's take a look and see what happened. On Monday, we got to 112.02, and again, my notes say sell euro dollar at 112, stops above 112.50, and look for a move lower. Well, we went from 112 to below 110, so it's a 250 pip move, almost from top to bottom, and if you sold it at 112, you are sitting really pretty right now. So, trade number one, did it work? Unbelievably well. Now, if you don't know why, and I'm going to, I just, again, these are my notes from last week, but if you don't know why that was such a big level, let's go back to the weekly chart. And if you take a look at the 160 level back in 2007, right? 2008, there's a descending trend line, right? And it comes basically down to the 112, 112.50 level. And while we're below that blue line, yeah, I don't think you want to be on the long side. And if you were short, congratulations. You did a hell of a job. Good job, trader. All right. Setup number two. Sell the S&P at 58.35. Well, as you can see, we have not reached 58.35 yet. I give you the yet, but we haven't made it there yet. So did that trade happen? Not even close. It's not saying that it won't happen. It's just, we never got to 58.35. So one worked, one never happened. Number three. Buy the US dollar, Japanese yen close to 140, long-term 618. Unfortunately, the dollar yen basically opened this week and just went for a joyride. The low this week was, let me take a look. The low this week was 141.64, so we didn't get close to 140. Remember, it is the long-term 618 retracement. There's your low to high. 618 retracement comes in right around 140.50. We were about 100 pips away from that at the lows this week. So I would say that trade did not happen. So two trades did not happen. One trade worked. I don't think it could have worked better. So congratulations. All right, let's go into what are the 3 trades that I'm looking at this week as we go into a fresh new week. Well, the first one is sell the US dollar Japanese yen from 149.50 to 150 and a quarter. So let's understand why I'm looking specifically at those levels. So let's zoom in on the dollar yen. Let me do a little bit of work for you, and I'm just going to do some deleting, and we're going to do some drawing. So one of the things about the dollar yen is if you look at this longer term, let me grab the line here, and let's do this. You can see there is a risk that we move all the way back up towards the underside of this trend line. Now, I'm obviously looking for levels ahead of that. So if you, let's get rid of this 618 since you've already seen it. You kind of know where that's at. You take these highs to this low, and you'll notice that the 150.78 level, that is the 50% retracement. There's the 200 DMA. So if you can get a short right somewhere between here, 149.50, to here, this is the sell zone. I'm looking for a move up towards the sell zone and then a reversal. Because your risk is really if we get back above the 200 DMA, probably about this level right here. So the closer you can get to 150 and a quarter, I think the better off you're going to be in this potential trade. The question will be next week, are we even going to make it there? And that's something that we're going to be looking to find out as of next week. So guys, gals, if you found this video beneficial, you think it's going to be beneficial for you and how you prepare for next week, make sure you give me a thumbs up. And I want to say thank you so much for spending your time with me. I really know it's your most valuable asset. It's your time on planet Earth. So because you choose to spend it with me, I appreciate that, and I appreciate each and every one of you. So thank you. Have a great weekend. I'll see you on the Monday morning F.A.C.E show. And don't forget, we have 2 free shows every single day. The Flow Show in European hours. Ryan Littlestone, he'll be joined this week by K-Man. K-Man is back, and he will be there for at least 3 days next week on the Flow Show. And then catch me and the team on the F.A.C.E show. I have been the host this last week is Dale Pinkert has been traveling, and I think I'll be that host on Monday as well. But Dale will be coming back this next week. So make sure you're listening in and welcome him back on his return. You guys and gals have a great day, great remainder of your weekend, and I will catch you on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.